and other investment activities. People recycle profits. And so what you've got is this perfect behavioral incentive loop that drives this ecosystem, which is why this ecosystem is so much faster. Because in the internet, we couldn't own a part of it. Here you're owning a part of the infrastructure layer. And that's an amazing, empowering thing. And everybody in the world can own it. Imagine if everybody could have owned a share of the internet. That's what we're dealing with here. This is why it's Web 3, because it's the next iteration.
In a recent interview on Zebuliv, Raoul Pal discusses 3 key topics shaping Bitcoin's future: the role of stablecoins, Bitcoin's correlation with traditional assets like the NASDAQ, and how rising global liquidity could spark Bitcoin's next price surge. At the time of this discussion, Bitcoin is trading around $65,000, with a 1% decrease in the last 24 hours and a 4% increase over the past 30 days. These insights are crucial as Bitcoin navigates global financial shifts, including recent job reports and regulatory developments surrounding Gary Gensler and the SEC. Before we dive in, don't forget to like, subscribe, and share this channel. Now, let's hear more from Raoul Pal.
What it's basically doing, the number of active wallets, which is in your world with IP addresses, right? So I compare the two. So when the world had 5 million IP addresses and 5 million active wallets, so look, we all have multiple wallets and multiple IP addresses. From that point, the internet was about 1994, I think it was. And we take the snapshot of crypto at the same time. Crypto is growing at twice the speed of the internet. Staggering. Why? Because it's built on top of the internet. Kind of makes sense. When you extrapolate that trend rate of growth out and assume it slows by using how much the adoption of the internet slowed as you start to get larger scale adoption, you get to 5 billion by 2030 or so. If we're at 500 million today, or 550 million, I think crypto.com, who sponsors here, I think do that, or blockchain.com, I can't remember who does it, but at 500 million, if it grows at 100%, well, next year it's 1 billion, and then it's 2 billion, and it's 4 billion. So it happens very fast. The technological adoption in these exponential trends are super fast. So what that means to all of us is, and I'll go back to what's driving it. One of the key drivers is this is now a $2 trillion market. And if we extrapolate these trends, it's going to $100 trillion by about 2032, 2034. 2 trillion to 100 trillion is the most amount of wealth the world has ever generated in a 100-year period, sort of 50-year period. The entire value of the US stock market is $50 trillion. It's twice the accumulated value of everything that the United States has produced in terms of public companies. But that's the scale of what is happening here. And why is it happening? Well, it's just a different layer to the internet. Firstly, the one layer, we talk about debasement of currency, also in financial inclusion and all the stuff that Bitcoin brought about, and stablecoins. Really important. We've been given a globally homogeneous product, the only one that really exists that is available to everybody instantaneously. People will say gold, but gold, if you go to a village in India, the bid offer spread from buying it from a gold merchant, it's not a currency, it may be a store of value, but it's not great. Everywhere in the world, with anybody who's got a mobile phone, which is 7 billion people I think now, 6 billion people have a mobile phone, can now buy this asset, right? You can't buy Tesla shares, you can't buy dollars, you can't buy any of these things. Okay, so that's amazing. And this asset is fractionizable. So anyone can put 10% of their wages in. Everyone's on the equal playing field. That never happens. You can't afford most things, but here you can have something that other people can afford. So that has driven a lot of interest from people, particularly if you're in a foreign country where they treat their currency badly. Okay, this is nice. The other thing we've seen is there is really only one currency in the world, it's the US dollar. Nothing else matters. But nobody can get access to dollars. If you're living in the Philippines, you can't go to your bank and get dollars. Now you have the magic of stablecoins. This is the fractionalized, mythical Eurodollar market, the largest market the world has ever seen. Now everybody gets access to dollars. Everybody gets access to an asset that grows. And why does it grow? It's driven by something you'll understand in technology, Metcalfe's law. Metcalfe's law is the value of a network. And this is a network that's built on the internet, which is the network that blockchain creates. The more activity and the more users, the more valuable it becomes, the more the token price goes up. So the more token price goes up, the more the money that is involved in the system. So what are people building? So they're building a new financial system. They're building the next layer to the internet. We have problems in a digital world. In a digital world, everything you make goes to zero in value over time because you can make infinite amounts of it. It's just a matter of cost and Moore's law. And so we've seen it with everything from cloud compute to email to you name it. Everything goes to zero. So that's a problem. If we're living a more digital world, how the hell do we have value in a digital world? You know, people know that their kids use Roblox and there's money, but that money goes to zero. And then suddenly the smart contract arrives. Smart contract is the way of using blockchain and then attaching scarcity because it's a contract and it's a scarce thing. So now you've created digital scarcity, didn't exist in the world. Okay, that explodes a whole new other set of use cases, whether it's in finance or whether it's in digital assets, gaming, that kind of stuff. So we're seeing huge growth there. We're seeing huge growth in loyalty points, getting brands together with their consumers is what Web3 solves. It gets rid of middlemen. And you've got this incentive system of which you can use in this technology like NFTs or tokens. So I'm seeing giant brands building all around the world. I'm on the board of a company called Devan, which is putting wine on chain and the logistics and the tokenization and putting wine growers with wine consumers. We're seeing wines and spirits industries overall, commodities. I spoke to one of the largest commodity trading houses in the world. They're shipping around cocoa and sugar and soft commodities. I'm like, what are you doing in blockchain? They're like, oh, we all, as commodity houses, all our letters of credit, all our shipping contracts, and all our quality certificates for all of this stuff is now all on blockchain. So we can settle instantaneously any transaction for any commodity.
As we just heard Raoul Pal discuss the impact of central bank rate cuts and Bitcoin's correlation with traditional assets, let's now explore his insights on how stablecoins are reshaping the global financial system and driving further Bitcoin adoption. This growing liquidity is setting the stage for Bitcoin's next potential surge. Now let's listen to more from Raoul Pal.
It's being adopted. You just don't see it. I've already talked about a commodity. All the largest world commodity trading companies are using that technology on a daily basis. You're seeing Visa use it on a daily basis to improve settlement and speed of transactions. You are seeing the stablecoin industry. It's now something in the top 10 largest holders of US treasuries in the world are these stablecoin companies. Stablecoins are being used for billions of dollars. I can't remember what the total volume of transactions was on blockchain last year, but I think it's to the tune of $5 trillion. No, sorry, $12 trillion. Right, this is not an unused thing. So it's being used at scale. Central banks, corporations are using Bitcoin on their balance sheets. We're seeing, you just don't see it yet because you shouldn't see an underlying technology. Technology should get extracted away. It should just be the rails on which we run. So last time I dialed in here, I was on my Apple Mac on a Cayman Islands line, connecting to a computer. Nobody knows or cares any of the technology.
Yeah.
I press a button, I'm on the screen in London. That's where all this is going. So the banana zone, we were talking about liquidity from the question at the back before.
Yeah.
So what happens to an asset that is in a secular uptrend, driven by liquidity, that also has a lot of investor and speculative interest with this adoption curve, is every 4 years, everything goes a little bit bananas. So on a linear chart, it does this and then it does this. On a logarithmic chart, it's all normal because it's exponentials. And this is the point. You've got to roll 10 trillion of debt. What you do is you debase your currency by liquidity. And what happens is prices start to rise. Prices start to rise, creates a reflexivity in this space. And what happens is prices rise even more. So the banana zone is something that almost everybody's waiting for. And I've been speaking to a whole bunch of people recently. I was with one of the world's most famous hedge fund managers today. He's like, when's the fucking banana zone? And it's like, you speak to, I'm on the board of SUI, which is one of the big new blockchains. They're like, at the board meeting, where's the bloody banana zone? Yeah, everyone's waiting for the banana zone because it's just it's a current function of what's happening in the macroeconomy. It's a feature of the market, and it's a great meme that kind of sums up what it's all about. And it looks like a banana because it does that and it goes bananas.
What did you say in those meetings?
I said, in Cayman we have an expression which is soon come, which is like, yeah, any day now. It's like, from the macro work that I do, and I probably produced, I don't know, maybe 100 charts on this last month, it's right here and now. We're already seeing the signs of all of the liquidity coming, all of the leads of this stuff. For some reason, the market seems a bit choppier than it should do. And the other thing, weird thing, why the banana zone is so important is, like, everybody's hopes and dreams are in the banana zone. Is that true, right? Yeah. I mean, literally everybody. I mean, anybody in Web3, they kind of know about what the power of crypto is in wealth generation. You know, again, 150% a year returns from an asset class since 2011, with 3 80% plus drawdowns included. When I move out the risk curve to Ethereum, it's about 170 something percent a year. When I get to Solana, which is earlier in its adoption curve, it's 280% returns a year. It just makes a mockery of any other investing. And so what happens is people end up becoming more and more invested in this space. And so the banana matters to them a lot. But that function of the token price going up drives a lot more activity, which is venture capital activity.
To watch the full interview, check out the link in the description. Raoul Pal's insights emphasize the crucial role of stablecoins, liquidity, and central bank actions in Bitcoin's future growth. We'd love to hear your thoughts on a few questions. Do you think Bitcoin will outperform traditional assets like the NASDAQ? How do you see stablecoins influencing Bitcoin adoption in the coming years? If you enjoyed this discussion, please subscribe, like, and share our video for more engaging content on the innovative world of decentralized technologies.